Adéle Barnard is a financial planner and investment specialist, and she joins us now for some tips on how to cushion the blow of tough times, particularly in an interest rate hike cycle. Thanks so much for joining us. Welcome to the program.
Thanks, Peter. Thanks for having me. I think I couldn't agree more with the economist. We are expecting a very tough time, and we've been through a tough time, but hopefully there is some light at the end of the tunnel. So I think the consumers, we are under pressure, and planning is key. And I know we hate the word budgeting, but I'm going to re-emphasize budgeting. We need to plan our meals when we go to the mall and to purchase groceries. Make a list, do your meal prep, do planning, so you don't end up with spending unnecessarily. So I want to add to that the fact that if we've got a bond, it's a multiplier effect. So it's not only a bond, it's our car finance, personal loans, credit card. So in essence, our debt becomes expensive and our disposable income is less. So that is why we need to have a plan for our money. We need to have the money talks. I cannot stress it enough. Get a financial planner, chat to your existing financial planner, partner with someone to keep you accountable so that you can make the right money moves. I think that is absolutely key to take us through this.
All right, we'll talk about those money moves a little bit more, but I just want to get a sense of what you see every time the interest rates go up a little bit. Is that some people literally, they were on the edge and then they fall off the cliff with each interest rate hike?
Peter, so it's such a valid question, because I think the problem also in South Africa is we just assume when I qualify for something, I can afford it or comfortably afford it, and it's not always the case. So I want to really emphasize that point, that affordability, we should have a big emphasis on that. So when I purchase or make a purchase, I finance something, whether it's a bond or a car, can I comfortably afford this? Because as we've seen, interest rates fluctuate. So, and we're back to pre-COVID levels. November 2019, we had 10.7.5% where we are right now. So it's decreased throughout, but it has increased again. And we need to make sure when interest rates do increase that I can still comfortably afford my debt and to manage it accordingly. So I think that you can handle the debt that you are taking out. So yes, I do see some cases, where clients are on the cliff, but we manage it and we partner. And like I said, just get in touch with the planner. Don't. I think also what's important is don't try to fix it all yourself, because sometimes it is too late. So rather get the help in advance. If you're stressing tonight or rolling around in bed, make that appointment tomorrow so that you can take charge of your finances.
All right. The way you're talking, it sounds as if no matter how bad it looks, there's always something you can do if you get the right help.
Peter, on the money, I think that's my viewpoint, and that's how I implement in my practice. Because the thing is, yes, there's lots of doom and gloom, stage 5 rolling blackouts. Food is already so expensive, it's possibly becoming more expensive. So the thing is, we need to have a plan in action. We can't do anything without that. So I think for me, it's also about the mindset and being intentional with our finances, and not just chopping and changing things without thinking it through. Even though the consumer is so under pressure, there's lots of financial anxiety going around, but have that conversation. Another tip I can share is please go check your bank statements. Pull 1 month or 3 months, highlight and scan and scrutinize and see where your money is going. I think that is also another tip. And as soon as interest rates also go up, like I mentioned, our disposable income becomes less, and we are so always tempted to cancel the insurance or things you really need to look after yourself. So I think that's why I'm saying stick to the people, the specialists in their field, so that they can assist you and we can partner and work through this until things look a bit more rosy again in the economy.
I suppose it's developing certain habits, isn't it? And it's also building a muscle of discipline. And it probably isn't something you'll be able to do overnight, but you just get stronger over time.
Peter, you're a man so close to my heart. I always say with financial planning or budgeting or anything in that line, it's like when you try to eat or be healthier, right? You don't start dieting today and drinking green juices or green veggies and going to gym, and tomorrow we've lost 10 kilograms. it's not how it works, unfortunately. We need to persevere. South Africans have showed time and time again we are so resilient. So get the plan, get it in writing, and action it accordingly. And like you said, it is a muscle. We need to exercise it, and we need to do it constantly.
Right. There's another side to this story, of course, and that is when the interest rates go up, your savings increase in value. And so I suppose this should be an encouragement for us to think about savings so that when the interest rates do go up, these are like bonuses that we hadn't planned for.
Absolutely. It's free bonuses at the same time. And for me, it's such a big drive, financial education, financial literacy, that we can literally stimulate and improve our knowledge, because the more we know, the better we do. So especially in times when the interest rates go up, and with the focus on savings, that we've got savings, especially for the rainy day or an emergency. I mean, I always say COVID-19 taught us anything. It's the importance of having that emergency fund. Should anything happen, should I lose my job, whatever the case might be. So also we need to have that mindset and shift to say the money I'm earning, I'm not only using it to spend quickly or however, but that I'm using the money, I always say make money baby, so that it can grow and use it to create assets for myself with savings and investments.
There are people watching this and they're going to say, you know what, Adele and Peter, you guys are okay. You can afford to save. I can't even afford to pay attention. There's no money for me to save. Is there a situation where you have no money to save, or is there always a way to find a way to save?
I think I'm going to go with the quote of a good friend of mine, Nicolette Mashile, where she says, sometimes we either have to eat less cake or find the ways and means to bake more cakes, right? And like you said, unfortunately, the reality is some people can't even pay attention. So it is tough out there, and the consumer is so under pressure. And the thing is, it goes back to the concept of possibly I must look where I can cut. And if I cannot cut any further my expenses, if I'm at the baseline, I need to see what alternatives are there out there for me. Am I going to try to get another job, or additional income streams, or I always think there are various ways, but also it's not a one-size-fits-all solution at the same time. So I think in essence, every individual should look at their plan, their finances holistically, and work accordingly.
All right, Adele, I wish we could talk for longer, but I think we've given people food for thought, and that this is actually something we need to take seriously. Get that budget habit done, and get financially intelligent as much as possible.
Absolutely. The more we know, the better we do.
100%. Thank you so much, Adele. Thanks for your time.
Thank you. Bye-bye.
Thank you. All right, that's financial planner and investment specialist Adéle Barnard speaking to us about financial planning. Given this interest rate cycle that we've been on, 0.25%, that could be the difference for a lot of people between keeping their house and getting it sold.